Taiwan is taking a measured approach to central bank digital currencies, or CBDCs. The island nation's central bank has announced plans for extensive research. They want to understand the implications of CBDCs fully. Public discussion is a key part of their strategy. They aim to gather input from various stakeholders. This cautious stance reflects Taiwan's commitment to financial stability. They recognize the potential of CBDCs to transform the monetary system, but they also understand the risks involved. The central bank wants to ensure that any CBDC implementation aligns with Taiwan's economic goals. They are particularly interested in how CBDCs could affect monetary policy. Taiwan's approach involves a multi-phase plan. The first phase focuses on research and development. They are studying the technical aspects of CBDCs. The second phase will involve small-scale trials. These trials will help identify potential issues. The final phase, if approved, would be a full-scale launch. Public education is a crucial component of Taiwan's CBDC strategy. They want to ensure that citizens understand what CBDCs are. This includes explaining how they differ from cryptocurrencies. The central bank is organizing seminars and workshops. These events aim to demystify CBDCs for the general public. Taiwan's careful approach could serve as a model for other nations. The global interest in CBDCs is skyrocketing. A staggering 98% of economies worldwide are exploring or advancing CBDC projects. This statistic comes from the Atlantic Council's CBDC tracker. It highlights the growing recognition of CBDC's potential. Central banks are racing to understand and implement this technology. This trend is driven by several factors. Digitalization of the economy is a key driver. CBDCs offer a way for central banks to modernize payment systems. They also see CBDCs as a tool to maintain monetary sovereignty. This is especially important as private cryptocurrencies gain traction. CBDCs could provide a government-backed alternative to these private currencies. The COVID-19 pandemic has accelerated this trend. It highlighted the need for efficient, contactless payment systems. CBDCs could provide a solution to this challenge. They offer a way to distribute financial aid quickly and efficiently. This was particularly relevant during lockdowns and economic disruptions. However, the global trend towards CBDCs is not uniform. Different countries are at various stages of development. Some are still in the research phase. Others are conducting pilots. A few have already launched CBDCs. This diversity reflects the complex nature of CBDC implementation. Each country must consider its unique economic and social context. Several countries have taken the lead in CBDC implementation. The Bahamas launched the Sand Dollar in 2020. It was the world's first nationwide CBDC. Nigeria followed with the Naira in 2021. These early adopters are providing valuable insights for other nations. They are demonstrating the practical challenges and benefits of CBDCs. China is another notable pioneer in the CBDC space. Its digital yuan project is in advanced stages. The People's Bank of China has conducted extensive pilots. These trials have involved millions of citizens. China's progress is being closely watched by other major economies. It could significantly influence global CBDC development. Many other countries are in advanced planning or research stages. The European Central Bank is exploring a digital euro. The Bank of England is researching a digital pound. Sweden's e-krona project is also well underway. These efforts show that even established economies are seriously considering CBDCs. Smaller nations are also making significant strides. The Eastern Caribbean Central Bank launched Dcash in 2021. It's a CBDC for several Caribbean nations. Uruguay has conducted a successful CBDC pilot. These examples show that CBDCs are not just for large economies. They can offer benefits to countries of all sizes. Financial inclusion is a key motivation for CBDC adoption. CBDCs could provide banking services to the unbanked. This is particularly important in developing countries. With a CBDC, anyone with a smartphone could access basic financial services. This could help reduce poverty and promote economic growth. Improving payment efficiency is another major driver. CBDCs could make transactions faster and cheaper. This is especially true for cross-border payments. Current international payment systems are often slow and expensive. CBDCs could streamline these processes. They could reduce the time and cost of sending money abroad. CBDCs also offer potential benefits for monetary policy. They could give central banks more direct control over the money supply. This could make monetary policy more effective. CBDCs could also provide real-time economic data. This information could help central banks make better informed decisions. Combating financial crime is another motivation. CBDCs could make it easier to track and prevent money laundering. They could also help reduce tax evasion. However, this needs to be balanced with privacy concerns. The level of transparency in CBDC transactions is a key issue for many countries. Section 5. Regional initiatives and cross-border projects. Regional CBDC initiatives are gaining momentum. The European Union is a prime example. The European Central Bank is exploring a digital euro. This could potentially serve all Eurozone countries. It's a complex project due to the diverse economies involved, but it could significantly enhance financial integration in the EU. In Southeast Asia, Project Dunbar is making waves. It's a collaboration between multiple central banks. The project aims to develop shared platforms for cross-border transactions. These platforms would use multiple CBDCs. This could revolutionize international payments in the region. The Caribbean region is also at the forefront of CBDC development. The Eastern Caribbean Central Bank's D-Cash is a pioneering project. It serves multiple island nations. This shows how CBDCs can work in a currency union. It's providing valuable lessons for other regions considering similar initiatives. Cross-border CBDC projects are not limited to specific regions. The Bank for International Settlements is leading several multi-country initiatives. These projects explore how different CBDCs could interact. They aim to create standards for CBDC interoperability. This work is crucial for realizing the full potential of CBDCs in global finance. Section 6. Risks and concerns in CBDC implementation. Privacy is a major concern in CBDC implementation. CBDCs could potentially give governments unprecedented insight into financial transactions. This raises questions about individual privacy rights. Striking the right balance between transparency and privacy is crucial. Many fear that CBDCs could become tools for surveillance. Cybersecurity is another significant risk. CBDCs would be prime targets for hackers. A successful attack could have devastating consequences. It could undermine confidence in the entire financial system. Robust security measures are essential. This includes both technological solutions and regulatory frameworks. The potential for financial instability is also a concern. In times of crisis, people might rapidly move money from commercial banks to CBDCs. This could cause a digital bank run. It could destabilize the banking system. Central banks need to carefully design CBDCs to mitigate this risk. Regulatory challenges are also significant. CBDCs blur the lines between central and commercial banking. This raises questions about the role of commercial banks. It also challenges existing financial regulations. New legal frameworks may be needed. These must address issues like liability and consumer protection in the CBDC ecosystem. Section 7. Balancing innovation and security. Balancing innovation with security is crucial in CBDC development. CBDCs offer exciting possibilities for financial innovation. They could enable new types of financial services. Smart contracts could automate many transactions. Programmable money could revolutionize how we think about currency. But these innovations must not come at the cost of security. Security in CBDC systems goes beyond just technological measures. It also involves robust governance structures. Clear rules and procedures are needed. These should cover everything from system access to dispute resolution. Transparency is key. The public needs to trust that the CBDC system is secure and fair. Innovation in CBDCs should focus on solving real-world problems. Financial inclusion is a prime example. CBDCs could provide banking services to the unbanked, but this requires careful design. The system must be accessible to those with limited technological literacy. It should work on basic smartphones and with intermittent internet connections. Collaboration between the public and private sectors is essential. Central banks have the authority to issue CBDCs, but private companies often have the technological expertise. Partnerships could lead to more innovative and secure CBDC systems. However, these partnerships must be carefully managed. The public interest must always come first in CBDC development. Section 8. The future landscape of CBDCs. The future of CBDCs looks promising but uncertain. More countries are likely to launch CBDCs in the coming years. We may see a diverse ecosystem of digital currencies. Some may be for domestic use only. Others might be designed for international transactions. The interaction between these different CBDCs will be fascinating to watch. Interoperability will be a key challenge. For CBDCs to reach their full potential, they need to work together. A tourist from one country should be able to easily use their CBDC in another country. This requires international cooperation. Standard protocols for CBDC interactions will need to be developed. The impact of CBDCs on the global financial system could be profound. They might change how monetary policy is conducted. International trade could become more efficient. The role of traditional banks might evolve. However, these changes won't happen overnight. The transition to a CBDC-enabled financial system will likely be gradual. Public acceptance will be crucial for the success of CBDCs. People need to understand and trust these new forms of money. This requires ongoing public education efforts. It also means designing CBDCs with user needs in mind. The future of money is digital, but exactly how that future will look remains to be seen. CBDCs will undoubtedly play a significant role in shaping it. That's all for today's deep dive into CBDCs. If you found this video insightful, make sure to like, subscribe, and hit the bell icon for more updates. Stay tuned for the latest news in the world of cryptocurrency. Thanks for watching, and see you next time.